Yeah, lower a little. So obviously, I've got storms, power, tech problems. I feel like Mother Nature's vibing the markets for us. But how are you feeling? And I really wanted to, I'm not launching until September, but I really wanted to catch up with you and try to test live because we last spoke on July 11th and you sold out of every one of your tech positions that day that we spoke. And everybody was like, whoa. I mean, that's crazy. And then the market has just been, collapsing ever since then. So just give me a gut check. How you feeling?
Feeling great. Feeling great. It's very not like me to get out without being forced out. But this was one of the times that I try to let a different level of my experience take over and, kind of say like a combination of not be piggy and kind of just read the markets from here because there's obviously reasons that can back off. And, without knowing when or where or what was going to happen, we ran into, a curve steepening, a yen carry unwind, the Nvidia bubble breaking all at the same time. So it was, I was lucky enough to sell back then before the Nvidia bubble popped, before the yen unwind and all of that. So now I'm sitting here with dry powder looking to decide what is going to happen next. Yesterday we had that steep sell off. Markets rarely bottom on a Monday, but we saw a 64 VIX print, which is a 12 sigma move, right? And any trader, following what's going on, you've got to fade that with both hands and buy everything when there's a 64 VIX print up. And, I managed to do a little bit of that yesterday as a pure day trade because you can't fade, selling puts at that price when the VIX is that puffed up. And we got a little bit of a bounce today and then a horrible close. So I'm very day to day, moment to moment, hour to hour on what I'm going to do next. I'm hoping that there's a serious test of the S&P's 200-day moving average. The longer that it's sort of, that's down at around 5,000 or so, 5,100. And the longer that, if we get down there, the longer that it stays at that level, the longer I'm going to get confidence that it's going to bounce from that level. The kind of thing like I'm feeling where this is either going to be a shit through the goose sell-off, where we're going to break the 200-day and just keep going due to deleveraging, but it doesn't seem like there's that much follow-up deleveraging to do after yesterday.
Okay, that's one of the big questions because I mean, you're hearing a lot of people, and there's a lot of noise out there, right? First of all, everyone was right. I know you were, but as you just said, for certain reasons, I don't think you foresaw everything that happened. So you're considering your timing was impeccable
Lucky.
again. So
Lucky
kudos
too.
for that. I mean,
Thank you.
that was the second time you and I have had a conversation where you nailed it. Last November is when you went all in, and then you got out, and so the timing has been just amazing, Tony.
So far.
So far, right. But we're hearing a lot of people say they got right, that they called for this to happen, which is hard to imagine given the selling we saw. And then you have a lot of people talking about, these huge unwinds, big numbers, how that's going to last, how it's going to cascade. And it feels like that's a lot of noise too. But you don't feel like this is necessarily over. But you're not seeing follow through, or do you? Like, you don't see follow through, so what inning are we in?
It takes it. This is a minute by minute inning call, Maggie. Right? I can't tell you what inning we're in. This is so. What the way I looked at what happened was, the S&P reached that crescendo at 5,700 and started backing off, right? And there were reasons to make sales, but my point is, I guess, the market backed off and there was selling, and we backed off to the 50-day moving average, and we kind of traded in between below there, and we backed off again, right? So there was more selling. And then it felt like yesterday there was a massive wall of selling, a huge VIX spike, a huge recovery in the treasury markets, or a huge top made in the treasury markets, rather. And you come in today and there's no follow through selling all day. There was no follow through selling after the opening yesterday. We opened and rallied. We came in today. There was no follow through selling until the last 2 hours of the day. And that brings back .com crash muscle memory for me, where we have these recovering rallies that look good and reel in all the bulls, including me. And then at the end of the day, they turn and tank them because everybody just uses MOC selling to get out of what they've got. So we've got to see now is it's hard to imagine that, the carry trade unwinding after 125 basis point rate hike by the B of J, right? But there had to be carry trade unwinding on the way down in dollar yen from 160 to 140. It didn't all happen yesterday, right? So you got to figure there's a portion of the carry unwind that's been cleared out. There's been a portion of long portfolio managers that have cleared out. Certainly a portion of long hedge funds that were levered to their tits that are now cleared out of those positions, right? Fine. Now we've got to see if there's going to be follow-up carry trade, or we have to see carry trade selling, right? Liquidation, or if there is going to be a continued move higher in the curve through zero where it starts steepening into positive territory, right? That is what sent the message to the VIX that there's a problem. The Fed is adjusting policy stance and the S&P is off sides. Right? That's the VIX at 64 yesterday morning. Everybody's off sides here, right? So we get the extended VIX print, we get the low water mark in the S&P early yesterday, and we bounce. So markets never bottom on a Monday. When I spoke to JD and Cuppy yesterday, Jared and Cuppy yesterday on our Macro Dirt podcast, which is going freaking ballistic right now.
Yeah, I love it. We'll talk about that in a second.
That I'm psyched about. Thank you. But we're talking about it like, look, markets never bottom on a Monday. There's going to be another day where we go attack that low. We all know it, right? So with 100 years of experience between us, that's what we're expecting. I want to see how the market reacts down there, right? If it looks like it's holding, and like I said before, the longer it holds, the more I'm going to say this is plain vanilla coming to the market to try to buy this 10% dip in the S&P, right? That's a signal that to them, this trend hasn't changed. They're buying the dip, man. They're here, right? Everybody's selling their stock and plain vanilla shows up. If we get to a position where all the short-term traders got long here at the 200-day moving average, then they're going to have to turn around and sell it. But if we're in a position where plain vanilla comes to the market at the 200-day moving average, catches everybody looking down while they're here accumulating stocks, God forbid, like Jared said, there's a potential for an intraday rate cut or something like that. We're going to get a short covering rally initially, I think. And then all bets are off, right? Because a lot of times you'll notice that the rate cuts can exacerbate selling. We saw that after the financial crisis, where the Fed came in and started cut rates to try to provide some liquidity for the markets. And the markets were like, oh my God, what does the Fed know?
What do they know? What do they know that we don't know? What's breaking?
Right. So that can also be a problem, So this time, my read is that it's not really an 07, 08 crash right now. My read is that we had a triple layer of NVIDIA bubble to unwind, curve steepening to deal with, and yen carry trade to unwind, all tripping into each other. So if that created that big selling that was yesterday, we'll get another intraday low this week, and that might be it for a little while, right? And if the curve, God forbid, fails to get through zero and then flattens again into negative territory, minus 20 bips, minus 30 bips, the treasury market, the stock market is probably going to rally back because that's a VIX melt. That's bond market, reversion to the mean. We remember these prices. Nothing actually new here, just a little blip in the curve. Buy stocks, buy stocks, buy stocks. Come on, buy stocks, right? Like that's what's going to happen. The VIX is going to get depressed back to 14 offered. All the bears are going to go, what the fuck just happened? And we're going to be back in uptrend like that because that's what we do here. So, I'm not going to say there's a 100% chance of that. That's how I'm looking at it. That's how I want to play this. That's what I want to transpire. God forbid that happens. It's going to be a good couple of weeks on this desk.
You know what I like about, how you're positioning this and how you're thinking about this, Tony, is you haven't picked a side. And you do hear some of that. The people who think recession's coming, the Fed's too late, they need to cut intermediate. It sounds like there's a point of view they have and they feel like it's getting realized. And on the other hand, you have the same thing with people who hated tech, just felt like this was coming. There seems like there's a lot of this in there, which can be dangerous, right?
Yes, yes. I keep my mouth shut when people start saying, for two reasons. When people start saying recession, I say, that guy's not a trader. That guy wants to be an economist. Let him be an economist. Go ahead. Predict the economy. I'm going to remind you, I've seen stocks go straight up every day during a recession. So if you think that's necessarily bearish, I'm sorry. You might get proven wrong. Now, they might get proven right. God forbid, there's reactions that the market has. Say we have a horrible NFP number, bonds rally, rates are lower. The stock market can get scared by that, I know. But what they don't get scared at is the Fed response to that shit data. The Fed doesn't sit there and say, oh, bring more shit data, let it crap all over the markets, go ahead, have at it, right? The Fed comes in and adjusts expectations and says, oh, hold on a minute here. If everybody wants to dump on this because of the bad data, we get it. Let them make sales. And now we come in and say, hey, we're going to do something about this here. Guess what? The curve is automatically minus 30 basis points again. What are you guys going to do? Right? And it's going to be, oh, we're going to take the stock market out of this hole now, is what we're going to do. So, I haven't picked a side because, I've been fortunate enough to have a really successful trade. I'm loath to screw that up this year. And I am waiting for inspiration, right? I'm not forcing myself to make any more plays. My play is over, right? If somebody wants to put another play back on my plate, I am going to eat again, right? But absence that, I'm going to sit here and spectate and talk about both sides like they're utterly possible in the next hour, day, or anything like that, because who the hell knows?
Yeah, because it seems like they are. When we talked about you selling it, you're like, I'm going to sell out all my tech positions. I'm going to go fishing. I'm going to get on a boat. I'm going to enjoy the rest of my summer. Yeah, not a chance that's
yeah, right. Exactly. Next thing you know, 64 vol print, and I literally haven't gotten out of this chair since 9 o'clock this morning.
I know. So when you were talking just a moment ago, just to clarify for people, when you were talking about plain vanillas in there buying, what are you talking about when you say that?
So when I say that, on every excessive market dip. Now, I have this experience from being an institutional equity trader and being fortunate enough to cover large, plain vanilla funds, right? Your Fidelities, your State Streets, your Capital Research Groups, your Vanguards, your whoever it is, right? These are funds that pretty much have a mandate. Down 10% in anything, I'm inhaling it because I don't get the chance to buy things down 10%. Right.
So
and
you're
those
longer
are
focused, more, pension
25-year time horizon on this trade, babe. You think I give a shit what's happening outside the window right now? No, I've got an economist telling me that in 25 years, a lot of people are going to be doing this. I got to be long this thing on the dip, man. I've got deep pockets. I can pay for it. Down 10%, I buy 5 times as much. You know what I mean? I've seen that. That's real. That's a real thing. So that's a side of the market that retail doesn't see, and they don't know that that's out there. That when they're down there looking down at the market potentially coming apart, you're staring right into a portfolio manager's pocket, and he's trying to buy everything in sight at that price.
Because you bring up a great point, right? Time horizon matters, and I saw none of that discussed, or not enough of it discussed, because I was, watching, listening around, to everything, and on X and watching everybody's comments, and there was not a lot of time horizon, because you're so right. If you need that, if you have a shorter time horizon, or you're trading, or have a trader mindset like you do, that's one whole scenario. But if you're long term, then you think about that. You can think about this very differently.
So, Maggie, I just brought out an exercise in our podcast because we were talking about the VIX spikes, right? So I call up a chart of the VIX and we pull up a 10-year chart just to look backwards, see where the VIX has been, right? We've had 3 prior spikes in the VIX that were of this type of magnitude, 50, 60, right? The lockdowns in 2020, the VIX spiked to like 75 or maybe even higher, right? When the market crashed, when we shut the economy down. 2018, beginning of 2018, Volmageddon, when we shut down, we blew up those short vol strategies all at once. 50 VIX print. 2015, oil collapses, $130 to $30 a barrel, right? De-risking all over the place, VIX 55 print. If you would have stuck a bid in on any of those days in the S&P, every single one of those days is in the money today. Every single one of them, right? So it's like when you look back over time, those are the times that, like, if you're a long-term investor, you got to be buying. You're never going to get that chance again, right? So that's how you got to see both sides of that coin, right? I understand the reasons for the selling. I understand technical breakdowns. I understand offsides. I understand sentiment. And when the people make the sales, the positions get cleared off the book, and then we start fresh. It's not like there's an endless amount of selling that's going to take place, unless there is. Okay, I understand markets can go down too. I have no problem with that either. This to me looks like a perfectly functioning market pullback. Nobody's pulling their hair out of their head. There's no single stock implosions like cut in half, or, we don't have a blow up scenario. We're not carrying out a fund, with tire tracks all over his back. That's not what's going on. So this is, to me, markets adjusting to excesses in Nvidia, excesses in the carry trade, maybe positions off sides in the bond market and the equity markets, and we're going to get back on our feet again at some point. So I'm hunting for that, and when it inspires me, you'll know.
Yeah. When you look at this, are you thinking that people will buy the same things again? Or I know you were always thinking about rotation. Or does it seem like if there is a rebound, are you going to be looking and hunting in different areas of the market?
I would lean towards this being a little bit more of a style box pullback, as my friend JD calls it, right? Like where you're gonna want to pick out the sectors that you think are gonna work. Right. I like home builders because that's a cyclical sector. It is a secular bull market, in my opinion, in this country. I like transports on this dip. I like financials on this dip as like three cyclical sectors that I think I'd rather be in than technology, with Nvidia and semis looking like they had their peak, or at least they came out of a really serious overbought condition, and now we'll see. But it seems like it's going to be challenging to get back to that double top in Nvidia at 140. Yeah. That was the big, also up there was the big market cap trick, where the market cap like went over the market cap of like Japan, the GDP of France, for a brief moment, and backed off, and the market cap of Microsoft, and was the biggest company in the world, and then backed off. So that's a really tough level sentimental wise to get back over. Yeah. So I'm going to probably stay away from tech and semis in this next cycle and look for something cyclical, and be wide open to the idea that lower rates might mean that growth stocks go again, and that it might be tech and the Russell that actually go next time. And I've got to be quick enough on my feet to realize that and make sure I get some before it's gone.
Yeah. What about commodities? What do you make of what's happening with commodities?
Yeah, Jared's got a stronger view on commodities right now, and I just mentioned him because I've got him on the brain. We've been on our podcast all day, and I'm still monitoring it closely. But I don't have that much of an action right now. To me, the Bloomberg Commodities Index, the price action just sucks. And it's because we're pricing in a weaker economy, a couple of things like that, a little de-risking, but there's no respect for the Middle East, kind of saber rattling going back and forth, right? Iran sounds like they're going to attack Israel, and the price of oil is going down, right? So there's nobody really respecting that the violence is going to do anything. So that's kind of strange, and I'm just hesitant I don't have a reason until we go interest rates, go a little bit lower, and the idea of like a decent bond return is gone, and the equity market gets a little harder to navigate. I don't get that positive in commodities. Like, the demand is there and they haven't been jumping out of the gym, but there's nothing really on the charts that's like, oh, we got to go chase this rally because this might be a secular 1 or 2 year rally, or we can front run China because they're buying X, right? The only thing that we can front run China in right now is buying gold, and I think we should. Yeah. So in terms of the broad commodity index, hard for me to get excited about the energy space given the price action stinks and we might be slowing down on the economy side. And so if that's the problem and stocks are going to also be sideways, then what am I going to do with, the E&P companies or miners or producers? They're probably not going to perform well either. So the commodities are still a tough trade for me looking ahead. Unless we go to zero interest rates and it becomes a hard asset festival, that's not something I'm going to chase, really. I don't think that they're set up to take off and perform for any number of quarters in a row.
Yeah, which is interesting. So people are looking for opportunity. I like that I saw you tweet out the conversation you and Cuppy had about front running the Chinese. I thought that was great with gold. I wanted to share something. Noelle Atchison, who does looks at both macro and crypto, put out something really interesting on LinkedIn just a little bit ago, saying that that instead of seeing, we know all risk assets got clobbered, right? Bitcoin and crypto with that, but it just in terms of sentiment, she's pointing out that you didn't see the outflows you might have thought from the Bitcoin spot ETF.
It's phenomenal.
There were outflows, but if you're thinking that it's this like complete panic, and the ETH ETFs actually had inflows yesterday. I thought that was really interesting. She did too. A little bit puzzling maybe, but you would think that would get just crushed if everybody was freaking out.
Apparently, the corporations that are buying Bitcoin using the BlackRock ETF, IBIT, have got diamond hands and they have no intention of selling. And maybe that's the case, and that's fine with me. I saw those facts and I was like, wow, that's amazing. I don't know what to do with it though. The chart still looks terrible. It still looks like it's going to be really challenged on its way back up to 55, 60K. I don't know. I don't know what to do with it. If we're going to be in a de-risking and tech is going to be weak, I'm going to stay away from Bitcoin because it's a levered bet on tech assets in the US, if you ask me. So
yeah, and you're still looking for, even though we had that rebound today, it looks like the close wasn't good, and you're still looking for another test, right? Another down, at least testing that average to see whether it holds or what sentiment is. Does it look like anything? So we can rule out this idea that something's breaking though, and that things are getting and dislocation. Did it seem like there was any of that going on that people need to worry about?
I mean, look, there's going to be powers that be that try to pad the markets in times of breakdown, but the Nikkei went down 12% 2 nights ago and went up 10% last night, right? Like Nvidia was down like 7% yesterday, and then I think it was up on the day a little bit today, or down small today, or anything like that. Like these would just be consecutive down days, closing on the lows on higher and higher volume if this were a market crash. Let's not forget about that, right? Markets that crash have to show signs of crashing. This is not what we're seeing, right? We are seeing a blatant rotation adjustment to the change in interest rate policy. I feel like that's observable. And if that becomes observable while the VIX melts to 13, the S&P is going to find itself at 5,500 again before we know it. So that's why I don't get terminally bearish on dips. If it breaks down, I'll worry about maybe negotiating the trade from the short side. But, with dry powder, man, there's no pressure on me and there's no gun to my head.
Yeah, I'm just going to ask that. Spoken like a true trader. We're going to wrap up, but what are some of the parameters that you're going to look at, or do you just feel like August is not going to be the time for you to take a stand? I mean, because everyone, it's so hard to resist the urge to try to catch the bottom, just as much as it is to sell the top, right? There's that urge to sort of get in. Are you trying to time it? Do you start to put money to work in a sort of incremental way so that you don't try to nail it on the day, even though you've done it twice in 1 year?
Yeah. So yeah. Well, what I've been doing, Maggie, I was sort of technically a day trader during the .com bubble bursting, right? I started a trading operation in March of 2000 on my own after I left Goldman Sachs because I thought I had the tech markets figured out, right? And I sat down to do that on my own to pave my early retirement with the NASDAQ at 5,500 on its way to 2,500. So I bought and paid for a lot of expensive lessons during that time period. And I swore on my life that if I ever got the opportunity to apply those lessons again, that I would directly apply them with no mercy. And so when the market opens at 9:30, I go back into muscle memory mode. And I say, oh, NVIDIA's down a 6 standard deviation, 6 sigma move into support. Okay, I'm going to buy as much as I can in the first 15 minutes and see what happens. With the VIX backing off from 64, a 12 sigma, standard 12 sigma move on its own. Okay, I'll fade that all day long. So, what I do is I employ my day trading techniques. I'm very much still an active day trader, and I make the market come and get me. If I see that, everybody's looking down and the bull market is, the bull market stock is on its back into support. Okay, great. Let's buy it. Break it down from here on me. I dare you. So I employ tactics like that on my intraday endeavors and stay very much engaged in the markets. And in my longer term accounts, like the one that I wrote 1,000 points of S&P in, I sit there with the dry powder and I wait for something to inspire me that says, you better buy some of that now with the long-term account. And we haven't been there yet. So I sort of keep my day trader cap on and I look for pressure points in the market, like where in the middle of the day, everybody's short and this stock breaks a downward sloping resistance level. For me, that's a great first entry with dry powder on the day. Right? I'm watching everybody blow their brains out, trying to press this thing lower, press it lower. And now we've broken the intraday downtrend. The S&P is recovering, and everybody sitting in this NVIDIA trade is short the stock right now. Let's get long and see if we can put up some high prints, see what happens. Let's have some fun. And to me, that's sitting there just waiting for opportunity to come to you. And I've gotten much better than at that in my old age. The young Tony Greer had to have a position on every minute of the goddamn day. This way, if it wasn't right, it was killing you.
Yeah.
Now I spend most of the day flat, and I go in when I know that I'm going to pray with an E.
Yeah.
When you go in and you know you're going to kill something, and when you see pain happening, you just go and draw blood. And so that's much easier proposition for me, and then get flat, and then you sit around and say, okay, what's next?
This is the silver lining of getting older. You get wiser, Tony. Your clients are lucky because this is.
I paid for all the lessons. Maggie. I'm not going to let them go down the toilet.
No, you shouldn't. But this is really when experience matters, and I love hearing from you guys right now because like I said, there's a lot of noise out there, and so this is when people who've actually, and you can see the difference because people are taking a step back and being thoughtful about things. There's a lot of people jumping and screaming right now. But it's tricky. It's really hard. And a lot of people stressed out. I know we're both packing kids off to college, which has been crazy to do in the midst of all of this. I know it's probably madness at your house too. It's interesting with time frame too, because I was thinking about younger people. What do you tell your kids? I mean, is this an opportunity? How should they be looking at this markets if they're 20? I mean, you see a big pullback.
Maggie, I love that you noticed that. I do pay attention to the youth. My son just graduated from Chaminade High School, and I taught a finance trading class to his teammates. And I threw it out there to see if anybody was interested and wound up with 25 kids on the team, seniors.
Amazing.
All sitting in my living room one day a couple of weeks ago. And what I encouraged them to do is open up an Interactive Brokers account and take some of their caddying money and put it in the S&P at 18 years old and just watch it, right? I promised them that it wouldn't go to zero and that they should just watch it, because if I had put money into the S&P when I was a senior in high school, if I would have put $1,000 in, it's worth 45 grand today, right? And I could have piled several $1,000s in high school. I made plenty of money as a construction guy, and I had cash out the wazoo, but I had to spend it at the bar at Neptune's instead of putting it into the S&P. And if I had put it into the S&P, we'd be doing this interview from my boat right now. And I told the kids this story, and now they text me and say, I got my account open, amazing, right? And I say, buy some SPY and buy some gold and sit there and watch it, right? Because you're young, man. This thing is not going to be here when you're 40 years old. I'll tell you that. So, there's little bits of wisdom that kids that are opportunistic and want to be successful, their ears are wide open, and they'll send you a screenshot of the account. Got the Interactive Brokers account open, Mr. Greer. What are we going in with? And you give them your best advice.
I love it. Let's get all those 20-year-olds old.
$100 worth of SPY. It's not going to kill them.
Navigator.
$100 worth of SPY. They're going to learn. They're going to get more in lessons from that $100 than. I mean, I wish I could tell you, Maggie. It's really a valuable lesson being invested in these at that age.
It's so true. And I'm thinking, even though it's really stressful right now, when you're just starting out and you see things going south, it's a good time to get yourself in there. And
if you bought every VIX spike to 50 when I was a kid, man, we'd be rich, Maggie. That would be it.
I know. But like you said, that experience is hard. It's hard fought. And, you still got to fight the emotional part of it, which I know a lot of people are stressed out. A lot of people are seeing their counts go down. So it's real. Tony, always so great to catch up with you. I'll get this tech stuff down for sure by September. But thanks for playing and helping out with it. Appreciate
Anytime,
it.
Maggie. Anytime. It's a pleasure to be on the show. It's good to get the karma going back and forth, and I'm happy to help Maggie Lake Media any way I can.
Awesome. All right, we'll talk soon.
Absolutely.
Okay, wait. Let me figure out now. Okay, I think I ended it there.